Hi guys, welcome to my channel. It's ALM Trades here. Today I will be showing you how I caught a trade on Wednesday during a news event. It was FOMC. It was at 8 o'clock South African time, but here on this broker that I'm using, it says 6 p.m. You see this blue candle, this big blue candle, this one. That's the candle that I paid many people and blew many accounts. So I'll be showing you how I caught that trade. Let's go to daily. We started here, daily. So Wednesday it was here, this candle, this big candle. It was for Wednesday. So I usually use liquidity sweeps, which SMC, ICT, MSNR. So I studied all those things, so I just mix them together and I make it simple, so you will see when I do it here. Let's get to it, guys. First thing first, since we were going to have a news event, we have to look at the bigger picture, because we know that price will be making big moves. So here's how I came into this. Just look at this cross here. You see here this rejection block. This price came into this rejection block here. Let me just put that through the block. This block here, it's a rejection block, because if you check here, price swept this low here. Just want to start from back then, you see. And then after sweeping, price came to break this high here. Price came to break this high here to the upside, you see. After breaking that high there, and then price came back to this rejection block here, and then again here on the rejection block, this low was swept, and then this low was swept here. Remember, lows, for lows I use red, and for highs I use blue. So that low was swept there, and then this high was broken to the upside there, you see. So if you want to be safe when there is a big news event, you have to look at the bigger picture, because price, it will be moving and making big moves. So if you don't have the idea of higher time frame, you might find yourself in a wrong direction, and it will be painful because price can make big moves in short period, in minutes, even in seconds. So it's better to be on the safe side, you see. So let's go back here. Liquidity swept high, broken to the upside, came back to rejection block, and then price again here swept this low and then broke that high to the upside, and then price came back. This was last week, you see. This was last week here. That was last week. This low, it was for last week. Let me just mark it. So actually in this video you will learn how to move with the time frames, like what do they call it, top down analysis. You see, we start from daily, we will go to 4 hour, 1 hour, 5 minutes. That's where that's where I took the trade on a 5-minute time frame. So last week price left this low and then this high there. Let me go and mark that high there, and it is still open. That high price didn't go to it yet. Price, so this is okay, fine. Here on Monday price made the high here, and then Tuesday it went down to take out the this low, the Friday low, the low that was made on Friday. It was taken. The low that was made on last week Friday, it was taken this week Tuesday, you see. So price left this high here. Price left this high here, you see. So now it was Wednesday here. So now on Tuesday price closed here at 4,024 USD. See, so here we had this open close here, open close level. I'm using blue because it price was moving to the upside, you see. So I'll just copy this, and then here we have our order block, you see. So we have this. So let's move to 4 hours. But then before we move to 4 hours, let me just move this to the side. But if I drag this to here and just look, we were still respecting this rejection block. This rejection block, price was still respecting it, because since if price is still respecting this and then it broke here, to the upside. It means we were still going to the upside, you see. So, but anyway, let me push just to the side and go to 4 hours on a 4-hour time frame. If you check, I'll be moving this crosshair. Wednesday started here, you see. Wednesday started here, and then price kept on the open close, daily open close here, and then it moved up to where? To this 4-hour open close, bearish open close here. This one I'm going to use red. Red, yes. I'll be using red for this because we were moving to the downside here. I hope you're with me, guys. If you check here, price left this open close here. This price opened here and then closed here, and then this one opened here and closed to the downside. So this, it's a key level. That's why I'm saying I use MSNR, ICT, SMC. I combine them. So here, I'm sure now you see what I mean by open close. Even above here, let me just show you this one before I move. And I want you guys to learn this. Even here, we had an open close level here. These open close levels, they are everywhere, but then you have to align them with higher time frame. The reason I highlight this one is because price respected this line that we marked on daily, the open close on daily. It was respected. You see, price just touched and then moved up, and then it touched this one as well. Remember, here we were not even in the market. It was me analyzing before coming to catch this trade, because I believe before you enter market you must have some reasons and solid reasons. That's why I try by all to go deep so that you can know these things. Remember, we started from daily, now we are only 4 hours. So here again, price was coming from up here, going down, short down here with this big red candle, this one short down, and then the following candle pushed and then closed below, and then it left this level, and then this 8 o'clock candle on Tuesday went up to respect this key level together with the fair value gap. It even tapped inside the fair value gap there, you see. So it pushed and then left what? Another open close level, and then it was tapped by this, just tapped a bit, you see, and then went down to this daily here, and then came back to sweep or tap again, and then went down to the order block. Remember that daily order block that I marked, it was 12 o'clock during the day here, and I was not even in the market here. I was not even in the market here. So let's go to 1 hour now. Because let's go to 1 hour. Boom, boom, boom. Excuse. Remember, price tapped on this line represent a daily order block. Remember that. And then this second line represent daily open close, and then this one is a daily bullish open close, and then this one 4 hour bearish open close level. You see, so here I was not looking at the markets. I could have used this CRT here. It is a clean CRT on a daily order block. So this is a clean setup to go up. So here with the broker that I'm using here, when it says 17 or 5 o'clock 5 p.m., it means it's 7 p.m. So I took my trade before, just I think it was if not mistaken 10 minutes before, or 8 minutes or 7 minutes before the event. So remember here now, we had this CRT. You see here, we had the CRT, and then price was coming again to this this 4 hour open close. So to me, this was just a liquidity. Price was just building a liquidity. This here, let me use trend line just to show you. I will remove it. All this here, to me, it was just a liquidity. You see, but I'll just remove this line. So let me go straight to where I took the trade. But you can see, guys, you can see it's clean. Price moved from here, it was moving up. So I'll go to 5 minutes, because I took my entry on a 5-minute time frame, because already my bigger higher time frame was showing me, was giving me reasons to buy. You see, so before price came and respected this open close here, let me just mark it here. If you check, there is a 5 minutes bullish open close key level here. Price came, swept, and then pushed to the upside and left fair value gap here, or I can say BPR, balanced price range, because it made a bearish fair value gap and then disrespected it, broke it, and then made bullish fair value gap. So here in ICT we call it BPR. ICT calls it BPR, balanced price range. Fair value gap to the down, fair value gap to the up. So that's where I took my trade here. Regardless that I am on someone was gonna think, no, this thing is gonna go down because we are on a resistance. But no, remember that price here, it was just generating liquidity, you see. So let me just show you the history so that you can see. You see, that's where I took the trade. That's where I took the trade, you see. And then I closed some here. I locked, and then it took me out here. I locked one, and then it took me out there, you see. So that's how I caught the news event. And if you check, some people remember they are scalpers, you know, and it's not wrong to be a scalper. It's not wrong to be a scalper, but then you have to calculate your risk management as a scalper. Because, for example, someone enters here, né? Someone enters here, and then this price moved so quickly, and you want to close that trade within 5 minutes, you see, and you entered a lot of trades, and then now your broker is starting to not it doesn't allow you to close the trades, you know, the slippage and all those stories. So once price start to come down here with all those unlimited leverage with small money, you see, you'll be thinking that you'll make 100,000 or 10,000 within 5 minutes, but then you end up losing all that money. So if you want to play that game, just play it knowing that you might be faced with a situation whereby your positions or your broker doesn't allow you to close those trades. And what happens when this price start to drop or go down like this, start to trace back? You see, it went back. Some of us who entered here with a reasonable risk management, even when price came back here, I was not panicking, because I know that even if it takes me out, it's fine, because my stop loss probably is below this low here. My stop loss will be below this low. But then if I was just entering positions while price is moving up like this, and now the broker doesn't allow me to close the trade, so you see, now I'm trapped. I end up blowing even when I'm right. So I don't like to play that game. So if you want to be around me, you have to know that you have to be patient. We enter clean trades. We don't gamble. We don't gamble here, you see. Because look, if you entered enough trades here and you just hold, look at this, price moved up to here, up to there, you see. This all look how big is that move, you see. How big is that move? So if you enter here, stop loss here, it's about 10 point something dollar, and then 59. If you take it there, 69, and then if you enter 3 positions or 4 positions, you see it's clean. So guys, I just wanted to highlight this part because I saw on social media many people were crying that their brokers, they didn't allow them to close. And in those situations whereby people just put more positions while price is going up, it is dangerous, that game, because when prices start to move down to retrace like this, majority of people's accounts will be blown, and then after blowing those accounts, price comes back and move up again and pays those who are more disciplined. So trading, it's a game of probabilities, and it needs someone who is patient and disciplined. For example, if you want to add more trade, you can use this fair value gap here. Wait for the market to retrace and enter again on the fair value gap at least. Not when price is moving up, because when it's moving up, you enter and you are not allowed to close. So what's going to happen when it retraces? It blows you even when you are right. So anyway guys, thanks for your time. Take this knowledge and apply it. Take this knowledge and apply it. Learn. See, I don't chase trades, guys. Even yesterday, Thursday, I didn't trade, but today I want to trade. That is why I woke up early in the morning to analyze. I'll be analyzing and then see if I can catch something. You see. So like the video and subscribe and set the notification so that when I drop a video, you will be able to be notified. You see. So anyway guys, thanks for your time. Peace.